Good afternoon. Please let me know how well you can hear and see me. I would like to get your feedback using the scale from 1 to 10. Well, I see your 10s. Thank you very much. We started the recording. There is the YouTube broadcast as well. Well, the only thing is, I believe that slides won't be changed by myself. Who will do it? Who will help me to change the slides? Someone will do it in our language rooms. Next slide, please. Welcome, dear friends. I am very happy to meet you. If you still don't know me, a few words about myself. My name is Ivan Poluyanchik, and starting from 2008, I was a certified psychologist and has extensive experience in active sales. And since 2020, I am an individual entrepreneur, and since 2014, I became a private investor, started to study a lot of things, so banking, saving, then life insurance, then hype industry. Then in 2017, I got a dive into blockchain. And there was a growth in 2017, starting from 1,000 to 20,000. That was the growth in the price of Bitcoin. Few people knew about it, but since then, I am an active investor in this industry. I study, I learn a lot about different cryptocurrencies, coins, and different technologies. I have studied a lot of technologies, and to date, I am a graduate of Master Profi. I am a business coach, and I have my own office in the town where I live, and develop investment of people. I am also a master of sports, and quite recently, I climbed to the Elbrus Peak, the highest peak of Europe. So therefore, at some point, I was ahead of you, literally. Well, hopefully now you know me. On the social media, you may find further details, but now let's start our today's topic, and we'll talk about crypto industry, blockchain technology. As of May 2021, crypto market capitalization hit record high, being worth of almost 2.5 trillion. And this is a huge amount. As of to date, this is the price of the value of Apple company, the most powerful company in the stock market. So Apple costs quite a similar price, 2.5 trillion. And it is only the beginning. As you see, the crypto industry, crypto market, and the market of blockchain technologies are evolving, are developing. More and more people are getting interested in this. And it is high time for you to study, to explore this technology. And this is the reason why we created a series of courses, a series of lectures composed of 4 lectures about the fundamentals of blockchain, so that any newcomer may understand from A to B to C the crypto industry, blockchain technologies, and so that those people with some experience may check their knowledge and structure their knowledge, make them consistent. Well, let's move on. The program of our today's meeting. This is what we are going to discuss today. We will discuss what blockchain is as a technology, the history of its creation. We will review some popular blockchains. We will study the key concepts of blockchain, different types of tokens, how to store them, how to mine them, and why blockchain is so popular and what makes blockchain secure, what is a smart contract and where it can be used, ways to raise capital to bring the project to the market, and it is more about investing and your interest as the attendee of this webinar from blockchain and crypto economy at large, and the value of blockchain technology. Why? And why this is the industry where you may earn quite a lot. Next slide, please. Well, let's study in general how everything evolved. So, storage of data and transfer of data. Here in this slide, you see that in ancient times, people kept records of some information on clay panels. Then they were replaced by paper, pencils, and pen. Afterwards, they were replaced by different diskettes, and some disks to keep music. So, and then we had different cloud services such as emails, mailboxes, messengers, and etc., where we can store and exchange some information. And how was the exchange of information organized? There were libraries. You could go there and take any book, read this information, but you had to walk there. And not everyone had access to these libraries. As of to date, Internet allows us to get access almost to any information, audio, video, text information, and there is a good saying, you may Google it down. So meaning you may find some information on the internet. So any information can be found on the internet. And exchange of valuables, some valuable things. In ancient times, they were different cells, furs, there was a barter, and then the paper money was invented and people started to use money to exchange. And today, many people use plastic cards and moneyless payments. And it's clear and obvious that all these things have been evolving to become more and more convenient. And all these things eventually resulted in blockchain technology, which today allows us to store, exchange information in a safe, secure way online without any possibility of losing all data because of decentralized systems and other advantages we will discuss today. Next slide, please. Well, what blockchain is? How you can, in a simple language, describe blockchain. Blockchain is a technology for storing and processing of information. Many people do not distinguish blockchain from cryptocurrencies. So here I would like to give you a simple example. Look, there is a technology. It is called internet. Everyone knows what internet is, and we all use the internet, but very few people know what internet is about in terms of the technologies behind. So different stations, substations, what we have through the wiring and how the computer connects to the cloud. Very few people understand this, but we all use it. We all have internet connection on our phones, and on our phones, we have access to YouTube, to other pieces of information. Here I have one person who sometimes does crazy things, so he distracts me. Could you please block this user? Well, blockchain is a new technology which allows us to exchange, store information as the entries in the chain of blocks. Next slide, please. So the history of the creation of this technology. There were a lot of prerequisites for it to come up. So there were some technologies of encryption in operation after the second half of the 20th century, so the technology of cryptography. And many technologies were eventually composed into one technology as such. For example, electric cars, different batteries and devices operated by batteries. They emerged quite recently, but battery-driven automobiles appeared much later. And when they reached the peak in their development, they could be integrated. Before that, we had a walkie-talkie driven by batteries. And at some point, these batteries became very powerful that they could actually drive the whole vehicles. And therefore, now they are called automobiles, so or electric motorcycles. And the same applies to the history of blockchain. There were a lot of different technologies to store data, and different torrents, cryptography. So maybe you know this data transfer technology. And at some point, all these technologies developed to the extent which is required. And in 2008, there was a financial crisis, mortgage-related crisis in the US market, which resulted in the global financial crisis. And at that point, it was necessary to create an alternative payment system that would secure some protection to users and protection of information. Everyone realized how vulnerable banking system is, and it was the first steps to develop blockchain. In 2008, a group of persons under the nickname Satoshi Nakamoto, it's still a secret, as there is a conspiracy you may find on the internet. So they proposed to use blockchain in financial sector. With a number of improvements, this technology offered a lot of advantages and allowed for secure financial transactions directly between people. And the first means of exchange was called Bitcoin. And everyone today knows what Bitcoin is. So before they exchanged some things, then some papers. So every country has its own currency, different national currencies, and then everyone got Visa or MasterCard. And today, this new currency is Bitcoin as a way to measure the value. Let's move on. And in 2022, the relevance of the technology has increased. In 2017 alone, the growth in price was driven by crypto enthusiasts, those people who develop blockchain technologies, or some individuals, whereas today in 2021, there are a lot of blockchain projects and cryptocurrencies that are backed by enormous resources and technologies. And as of to date, countries, the states, started to explore this topic. They adopt different policies, legislation, and there are those who wish to create state-owned cryptocurrencies. And as of today, early summer, I was in Skolkovo at one of the events, and the representatives of the National Bank of Russia said there that there are already developments of cryptocurrencies by central banks of different countries, meaning that the governments already keep an eye on these technologies. And blockchain technology is getting more and more widely applied in finance and businesses. And many companies start to use blockchain for their business processes, for record keeping, for data transfer, for bookkeeping purposes. So they start using blockchain for different purposes, and they are quite successful. And why? Because blockchain provides a lot of advantages. And now many people could not imagine their lives without an internet. So you may write down, if you still remember your life without an internet, give me a plus. But if you don't know what it means to live without an internet, give me a minus. And you will understand that there was history before and after. The history before internet and as soon as the internet emerged. And the same applies to cryptocurrencies. Why? Because today cryptocurrencies are not widely spread, but at some point our children or grandchildren could not even imagine that we used some paper money to pay for products in a shop. Well, what are the major advantages of blockchain? First of all, decentralization. When there is no single hub, and we will discuss about each of them in detail, there is no hub, and all the payments, all the transactions, all the transfers are recorded in a common registry that is in access to everyone. There is no single center to be hacked, attacked, and this way we achieved security. Well, the next one is no middleman. When there are some transfers, there are no intermediaries that may block or impact the transaction itself, as everything is done through the calculations, mathematical calculations and algorithm. So you press a button and the process is started. Minimal or no commissions. The system is decentralized, working on the internet. It does not require a lot of funding to support the personnel for them to check and double check everything. Therefore, in some cases, there are no commissions at all. And in most cases, they are very small compared to the traditional system. The next benefit is anonymity, so confidentiality, because there are no last names, only figures, letters, characters, and except for those cases when you on your own may publish your details or when you have to submit data about the availability of some crypto wallets. So blockchain ensures confidentiality, but this is the topic that is heavily manipulated by the people, by the media, so therefore we will not dwell on it a lot. In terms of security, blockchain is much more secure than a centralized system. Why? Because it is almost impossible to break such a system, and I will explain why. And the rewards for transaction verification for mining. So blockchain allows us to mine blocks and allows to earn, so allows those people who are loyal users, so they can earn. And we will discuss all this, and not only in this course, and the most handy information will be provided in our next session. This session is introductory, but more practical material will be presented at the other sessions of this course.
Well, so let's look into the most popular blockchains. Well, everyone knows Bitcoin, and many people confuse Bitcoin with blockchain. For many people, Bitcoin and blockchain is the same thing, which is not true, of course. We need to separate those two notions. So first, there is a notion of the blockchain, which is a technology. And then we have Bitcoin, which is like a derivative of that technology as a unit of measurement of that technology. Well, for example, we have the internet and we have a file that we transmit through the internet, and it has the size of 1 megabyte. So we send the file with the size of 1 megabyte, and we send it over using the internet technology. So the internet is the technology, and 1 megabyte is the volume of information. The same here, we have Bitcoin as a unit and the blockchain as the technology through which this Bitcoin travels and is transferred from peer to peer. Also, it is important to point out that Bitcoin has a limited issue. That's why it is valuable, one of the reasons, because everyone knows that countries, states can print money literally with no limits. And people know that the US sovereign debt, foreign debt, is growing like weed, and when inflation is close by, the printing machine is activated. So give me a 5 in the chat if you know what I mean. Whereas Bitcoin has a limited issue, which is encoded in the Bitcoin code itself. In order to change the number of blocks to be issued, to be mined, more than half of all the blockchain users have to agree to that. So imagine a situation, there is a crisis in the country and the state says, why should we take measures? Let's just print more money and not change anything. Let's keep it as is. With Bitcoin, you can do this trick. Therefore, for the system to print quote unquote new Bitcoins, 50% of the entire community needs to say, yes, let's issue more Bitcoin. And do you think, is it going to positively affect the economy of the countries if the governments were limited in their capacity to print money. So if you agree with me, then give me a plus in the chat. So Bitcoin has the deflation model, is based on deflation model. The current fiat economy is inflation based, because the more money is printed, the more the bigger the inflation and so on. Whereas Bitcoin is based on deflation. That's why it gets more and more expensive, because more and more users appear, whereas Bitcoin, the number of Bitcoin is not increasing. So fewer and fewer Bitcoins are mined every year. And the mining, the issuance of Bitcoin is estimated to end in 2045. And then only 21 million Bitcoin will be in circulation in the, let's call it, crypto economy. There is one more popular blockchain, which is Ethereum, which is both a cryptocurrency and a platform. So if you are hearing about Ethereum for the first time, give me a 1 in the chat, because I like people to, interact with me, and I can see that my words are settling in. Okay, so Ethereum is also a blockchain, which is based on a completely different technology, and the main principles are based on decentralization too, but it has some additional features, some additional advantages compared to Bitcoin blockchain, which is smart contracts. Also, you can create your own tokens on Ethereum blockchain. You can create your own cryptocurrencies, your own units, and name them. And you can attach certain characteristics to them. So Ethereum blockchain is a more evolved model compared to Bitcoin blockchain. It is important to understand that there are different blockchains. Let's compare. There is a very good comparison. We have a button-based phone, which has just one task, is to make a call or send a text. And it uses the wireless data transfer technology. Or for example, even not a smartphone. Imagine, remember those old phones with a wire too. The only function is to send voice and receive voice. Whereas now we have smartphones, which have sensor panels, but the original function might be the same, is to place a call. But the smartphones offer way more other functions in addition to placing calls. Smartphones have applications, video games. You can watch video, you can make a note, you can send a text, whatever. There are many functions. Similarly here, blockchain Bitcoin is different from the Ethereum blockchain. A blockchain Bitcoin has just this unit, Bitcoin, that you can transfer from person to person, whereas Ethereum blockchain allows you to create smart contracts, develop applications, create your own tokens, and organize your own businesses thanks to this blockchain. And this blockchain was created in late 2013. The concept was proposed in 2013 by Vitalik Buterin, a Russian national, a very famous developer, a programmer. Next slide, please. And another popular blockchain is EOS, which is an absolutely new version of the blockchain. It's a new approach to the entire structure of data. So if Bitcoin is like a button-based mobile phone, Ethereum is a smartphone, EOS blockchain can be envisioned, visualized as a computer. It might not be as popular or convenient as a smartphone, but it allows you to do even more things, to use the technology even more effectively. You must agree, a computer is better for processing video, for typing text, to run your business on computer rather than a phone. Guys, if you agree, give me a 5 in the chat that computer is more user-friendly and convenient for certain tasks. And EOS is a new blockchain platform using the delegated share proof of protocol. Delegated share proof protocol. It's a proof of stake. And in the EOS blockchain, you don't have to charge a commission. This is another special feature that it has no fee, which allows to speed up the use and scale it up literally big time. So let's go to the next slide. So what is a fork? Well, a fork is usually a product that is created on an already existing program code. That's what programmers call it. So the fork allows the new team the opportunity to develop independently or evolve the already existing blockchain. For example, we have a car with a steam engine, and then someone came up with the internal combustion engine. They took the existing shell of the car, but instead of a steam engine, put a gasoline engine. So this is like a fork of the car with different internal mechanism. It's better than someone takes Ford's mechanism with, I don't know, internal combustion system, but instead they give it a new outside, more aerodynamic shell, exterior. So the internal system is the same, but the shell is different. So fork, in other words, is improvement of something that already exists. And in the crypto world, there is a website where people share their developments, and programmers can simply take those developments. They are called open source, and they can take that open source code and further improve it, just in order not to invent the wheel again. They take an already working time-tested algorithm and introduce a new function in it. Let's go next. And these are the most famous cryptocurrency forks. Litecoin has a higher data transfer speed. Bitcoin Cash, Bitcoin SV, Bitcoin Gold, they have different technicalities. We're not going to go into details here, but each of those cryptocurrencies are based on Bitcoin or Bitcoin Cash. And so all of those cryptocurrencies are a slight improvement over its predecessor. Ethereum Classic, Dogecoin, Dash, all of those coins are forks of already existing blockchains. And in March 2021, a record-breaking fork was launched based on EOS. This is a blockchain called Cryptounit. It launched at once with more than 900,000 accounts. EOS has around 2 million accounts, whereas Cryptounit account started immediately almost with 900,000 accounts. And you will be able to get more details about this blockchain and all of its advantages during our subsequent sessions, where we'll look into all the advantages of this blockchain and how we can use it and how we can make money using this particular blockchain. Let's go to the next slide. Okay, let me give you some statistics. Currently on the website blockchain.com, which is the biggest website that tracks Bitcoin blockchain. Currently, we have more than 75 million active wallets. So if you take a look at 2018, there were 20 million. In 3 years, the number of active wallets increased almost 3 or 4-fold. So 4 times. And we see that the number of people who use cryptocurrency is growing and with no downward trend, even considering that the Bitcoin price varied between 20,000 and 64,000. Now it's around 40,000. So we see a constant increasing trend of people who are using crypto wallets. Also, we can see the increase in the number of users of cryptocurrencies worldwide. If we take all the cryptocurrencies, then almost half of all the users of cryptocurrencies currently are located in the North America. Well, Canada and the United States mainly, because those are the most developed economies of the world and the most developed technologies too. They are located there. The second place is taken by Europe. Then we have Asia, South America, Africa, and Oceania, and Africa. So I think you fully realize that someone somewhere in the world has cryptocurrency, and this is just the beginning. It will develop more and more. Let's go to the next slide. The capitalization of the crypto market. On this slide, you can see that at its peak, not so long ago, in March 2021, the peak capitalization was almost $2.5 trillion. And as you can see on this chart, there were ups and downs in the crypto industry, but more and more money is injected into crypto industry. So what does this capitalization in chart tell us? It tells us that over time, more and more interest is shown by people and businesses alike. Interest in this technology, more and more money is accumulated in this technology. And right now, it is high time to learn more about it. At the moment, we are in the correction phase, but very soon there will be yet another peak in the interest and development of this sector. Let's go to the next slide, please. Here's another interesting chart. So look, here in the upper part, we can see how the internet has developed. Whereas in 1994, only 26 million people used the internet, and over quite a short period of time, 24 years, the internet gradually but steadily entered our lives. And in 2018, practically half of the planet were users of the internet. And currently, in 2021, I'm more than sure that at least 2/3 of the global population have access to the internet. If you are of the same opinion, give me a 3 in the chat. So since the internet itself is, let's say, a way of exchanging information, the information about cryptocurrency started developing way faster thanks to the internet. And currently, well, whereas in 2018, we had around 30 million people who use cryptocurrencies, as of 2021, we have around 250 million people who use cryptocurrency. And I would like to point out here, remember I showed you the slide with 75 million wallets opened on one website, blockchain.com. It had 75 million. It's the biggest resource. So it's almost 1/3 of the entire crypto market. It's bigger. But even if it's not 250 million, well, at least it's 2 million users of cryptocurrencies worldwide. And the development of this industry will be way faster than the development of the internet, for sure. And according to the forecasts of the analysts, by 2030, 2033, the most part of the population will be using cryptocurrencies in this way or another, or be somehow involved in the blockchain industry. Let's go next to the next slide. And now let's talk about the key concepts of the blockchain in order to, as they say, dot the I's and cross the T's and synchronize our watches. So lots of people use different terminology without realizing what they mean. So in blockchain, there is such a notion as block, which is a list of records validated and embedded into the chain, or hence the name blockchain. It's a set of data stored in an undivided form in a distributed ledger. So you can imagine it as a notepad. So imagine you have a notepad, which is a block. And then you can input one record, one entry, or several entries into that notepad. They can be totally unrelated entries. An entry about how much money you have, or how much money you gave away, or it can be an entry about how many square meters your apartment is, which part of that apartment is owned by your wife, and so on. So all of those things will be entries, and each entry can be represented in the form of the token. Token is a record, the entry in one block, a record in the transaction block ledger, or another distributed information system. In some blockchains, one entry, one block. Some blockchains can have several entries in one block. The technology can be different, but all of them have blocks that are put one after another into a chain, and each block means something. And we will talk more in detail about those tokens. And let me point out right away what cryptocurrency means. Cryptocurrency is also a token, an entry in the block, which has some settlement function, payment function too. It can be used as a universal means of exchange. Next slide, please. And we're going to talk about the types of tokens.
The first one is cryptocurrency, which is well known to everyone and which can be exchanged into some valuables. To say Bitcoin has some value, and you may pay with Bitcoin for your car, for your house, and many other things can be bought with Bitcoin. And in different countries, there are different currencies, including US dollar, euro, other national currencies, and the same thing in different countries could be bought with different currencies. And to date, Bitcoin is the valuable thing, and it could be used to exchange it for some goods, services, and to pay with a Bitcoin. In particular, programmers, developers, when they develop some software, they are paid in Bitcoins. And I know some examples when people provide some services and are paid in Bitcoins. There are some countries where cryptocurrency is recognized as a settlement means. The second one is platform tokens that are the basis of some platform. Ethereum blockchain, and there is a relevant token, Ethereum. And for us to create our own token on Ethereum blockchain, first of all, you need to have Ethereum tokens, then make some developments, start a smart contract, and freeze the specific number of Ethereum to issue the specific number of your tokens you will create. And the same applies to EOS. There is EOS blockchain, there is basic token called EOS, and to operate on EOS blockchain, to create smart contracts and to operate a wallet, you need to use the basic token of blockchain. And these tokens are like the settlement means. So many people confuse it and believe that they are equal to cryptocurrencies. Can you exchange Bitcoin or Ethereum into money? Yes, you can. But can you write on Bitcoin smart contract? No, you cannot do it. It does not support this functionality as creation of a smart contract. Whereas on Ethereum, you can create smart contracts and you must apply Ethereum. Bitcoin will not be suitable for this. And UNTB, this is a token that could be mined, and it is on Cryptounit blockchain. And next time, at our next lecture, you will learn all the details about this token, so how much and where you can use it. So don't miss our webinars. It will be very interesting and you will learn a lot of new. Let's move on. Well, utility tokens. They are some tokens, the main purpose of which is to carry out a function apart from settlement. Yes, it could be used for settlement purposes, but Golem token, for instance, is the volume of data storage. If you want to store data, you need 5 gigabits. You are to buy the specific number of volumes to retain, to store this information. It provides some service. Could you exchange it? Yes, you can. The more people would like to keep the information, to store the information, the more expensive it will be. The same applies to CRU token. It also has its functions. And at our next webinar, we will discuss and explore them in detail. There are also tokens, the number that reflects the number of goods at the warehouse, so the quantity. Or there are tokens that reflect the square meters of flooring area of real estate, and they show who the tokens belong to, or the parts of the flooring area belong to. And for instance, in our office, there are 12 chairs. We may issue 12 tokens in an office, and each token will be equal to 1 chair if they're numbered properly, and there are some numbers attached. So, and by transferring a token, you may transfer your chair or use it as a ticket. For instance, I have token number 3, meaning that your seat is number 3. So these are utility tokens. And the fourth type of tokens is security tokens. These are digital shares. These are very interesting things, as these tokens emerged only in 2018 after this hype with cryptocurrencies. These digital shares started to emerge when a token is backed by real physical assets. If you understand what shares of Apple, Google, Facebook are, give me some indication that you know which shares I'm talking about, give me a plus. But if you don't understand what I'm talking about and how to use them, give me a minus, because there are some few people who don't understand. Well, shares are securities that give you the title of ownership. And these securities are issued by companies. They are kept in some registries, and a security token allows us to do the same on blockchain by using decentralized methods. And these tokens quite frequently are registered by the Securities and Exchange Commission and other regulators, by other ministries and agencies. They are regulated they are supervised and they are to be compliant with some standards of legislations. So utility tokens could be issued as you wish and do whatever you want, but security tokens are seriously, strictly regulated. So therefore, you are to be in full compliance with the provisions of legislation, and quite often these tokens have some lookup period. So the block period, you may not simply get them and quickly sell them. So some of them at least are frozen for 1 year. For instance, Elon Musk got the specific number of Tesla, but he could not benefit from them for a long time, as there were specific terms and conditions under his contract. Not sooner that he takes the company to the specific level, he won't be able to take advantage of these shares. And about 5 years, these shares were frozen until Elon Musk could take advantage of them. And the same applies to security tokens under different terms and conditions. These security tokens may have lookup periods, as they are regulated by some regulations, by some legal acts or some programs, business plans, and etc. Let's move on. The next slide. We do have another type called stablecoin. This is an analog of a digital US dollar, so a coin that is backed by something stable. So Bitcoin is very volatile. So when we talk about $1, it's clear that it is a US dollar. It is still a US dollar in Africa. And such coins as USDT, USDC, USDU, there are a lot of them, but all of them are equal 1-to-1 to US dollar. So there is a legal entity, a business, that is responsible to make sure that its one token is equal to 1 US dollar. And this company is entitled to exchange their token into their stable coin into 1 US dollar. But the technicality is how they will do it. This is another topic. Type number 6 is the crypto fiat, so the currency of any state in the form of cryptocurrencies. I've already said that today many countries, many governments consider, and not consider, but they're getting ready and they are developing their own digital currencies. And one of such currency is called Petra in Venezuela. And after the heavy inflation rate and crisis, they created their own coin called Petra and actively develop it. And some countries are waiting for the cryptocurrencies to be recognized as the settlement means. But such countries as China, Russia, the United States, Europe, they have been developing their own blockchain solutions for a long time. Why? Because they understand that fiat money and moneyless payments are getting outdated, and they understand all the benefits of blockchain technologies, and it's obvious they try to introduce this into their states, not to be last in a line. Well, there are other tokens that reflect some specific number of assets or natural resources. For instance, there are some tokens that are backed by silver, gold, oil, diamonds. These are the tokens to keep records of the quantities of some resources. They are tied to some resources. There are crypto collectibles some cryptographically unique assets that are very unique and they could not be repeated or duplicated. So well-known CryptoCats, these are collections, online pets, by developing which you get some unique set or combination, and this way these tokens are antique assets, or you may imagine that this is a painting of a great artist in the form of the painting NFT, and you may share it in part with other people, and there are some coins, some tokens that tokenize the well-known paintings. An interesting technology, but we will not elaborate on it a lot. As you see, there are a lot of different tokens and there are a lot of different methods of storing these tokens. There are the main ones we will explore right now for you to understand that in addition to different types of tokens, there are different places and ways to store them. So the first one is blockchain-based wallet. When you go to the Explorer, to the website of the blockchain, you insert open and closed key and may keep your tokens there. And it is quite a secure method of storage. And apart from you, if you are the owner of the closed key, no one could do anything with these tokens. But there is a risk that if you lose this key, no one will renew it. And a lot of Bitcoins have been lost because in due time, people created crypto wallets and then they thought it's something unclear and they lost their logins and passwords. And about 20–30% of all the Bitcoins have been lost forever. They are kept, they are stored in dead wallets and no one can take advantage of them. Another method, next slide please, is cold wallet. They are some hardware devices that allows you to store your closed key in a more secure way. So you get access via some device to your wallet, but these devices facilitate increased security of your storage of this closed key so that you can carry out some transactions. If you have a lot of cryptocurrencies, then I would advise you to use more secure and reliable methods of storing your seed phrase rather than on your PC, on your laptop in a file, as it could be attacked and hacked and discredited. And one more method is exchange wallets, meaning that at some websites which accept currencies, at some crypto exchanges, there are multi-currency wallets you may download in Play Market and App Store, and there you may store your cryptocurrency. And what is the advantage of this case? First of all, the number of different cryptocurrencies you may store. On Binance Exchange, the largest ones, there are hundreds or even thousands of different cryptocurrencies stored. You may store them there. There is a large list of these cryptocurrencies. In addition to that, the exchange is a quite reliable method of data of cryptocurrency storage. Why? Because an exchange is a large company with the serious framework of protection, and you may lose your login and password, or you may be hacked. Yes, there is such a risk. But if you store your logins and passwords in a quite secure way, so believe me that the exchange takes care of its protection, of its security, taking a lot of efforts to prevent hacking, and it has the full team of personnel dealing or in charge of cybersecurity. And the advantage of storing cryptocurrencies in different wallets or on the exchange is that you may use them promptly. You can make a transfer or exchange them into another token, or withdraw to your card and exchange into the fiat and then make a withdrawal. Or you can take advantage of a sharp increase in price and take your profits. And it is more convenient to do at the exchange rather than you store your token on blockchain. First of all, the first step is to transfer them to the exchange, and it takes time to carry out the transaction. And whereas when at exchange, you may do it with one click. You log in, press the button sell, and it is done. Well, let's move on. The next slide, please. Mining and its types. Have you ever heard of such word mining? If yes, give me 5 in the chat, please. 5 if you heard of mining. If no, give me 0. So mining is the validation of transactions on blockchain. So there is a team of people who validate these blocks and record them one by one. I will give you an example, a simple example. Many of you have cars and you use your cars. If you don't have a car, quite likely you use taxis or trains, and you know how convenient it is. If you agree, give me plus in the chat. And to move from one point to another, to travel from one point to another, you may use some transport, but you need to fuel this transport with gasoline or with some other fuel. But who actually extracts this fuel? So gas operators, oil operators, so miners. Those people who actually extracts some valuables so that we may take advantage of them. And miners are an industry of those who support and maintain the operations of blockchain technologies. So mining can be split into 2 types. Next slide, please. They are 2 types, proof of work and proof of stake. Quite likely, you know these 2 ways with the use of video cards, ISICs. You've heard that to be able to mine, you need to buy a video card, plug it into the socket and pay for the power, and then it will produce something, some new tokens. But today, there is a different type of mining, which is called proof of stake. When you don't need to buy some equipment, you may buy blockchain tokens, and Bitcoin is Ethereum, and today they are mined by means of proof of work. And EOS and Cryptounit blockchain are on the principle of proof of stake, when you can simply buy the specific number of coins of this blockchain, EOS or Cryptounits, and freeze them and stake them, so freeze them. And for freezing your money, you will earn additional coins. And by means of freezing, you become a validator of blocks. And this way, you may use the special software, the smart contract that regulates this. And this way you are rewarded for being a validator or a loyal user of this network. Let's move on. Next slide, please.
Now we will look more into detail the whole staking thing, the proof of stake mining. There are different algorithms for such mining, but we will talk specifically about staking. When you buy the coins of the various blockchains, well, truth be said, there are lots of different blockchains and staking options out there. In our case, the basic principle is as follows: that the blockchain, being a decentralized system, is based on the principle that the more people use it, the more protected, secure it is. So the more money or coins are frozen, are staked, the more secure the whole system is, the more reliable the whole system is. And currently, Ethereum gradually moves to a new type of mining. I don't know whether you know it or not, but gradually Ethereum moves from mining proof of work to mining proof of stake, because the number of users is growing really big, and the more people to be able to use this particular type of mining, Ethereum goes to the new form of mining. Proof of stake mining is more accessible to most people due to a simple reason that you don't have to buy computational power. You don't need to set up the entire system. All you have to do is buy coins and place them in a specific place, click on the freeze button for a certain period of time, for like a month, 3 months, 6 months. So there are different opportunities, elements out there, and we will look into those elements during our subsequent sessions. Let's go next. So what does make blockchain secure? I already told you about decentralization. So this is a simple diagram: the centralized system and decentralized system. If you remove the center from the centralized system, all other participants don't have the core block of information. For example, imagine a bank goes bankrupt. Then nobody knows how much money they had, how to have that money back, and so on. As for the decentralized system, then all of the users can see the entire amount of coins circulating together. And even one of the users, for some technical reasons, is disconnected or falls out of this diagram, then the other centers will work without them just fine. They won't even feel the absence of that other user. Also, one of the advantages of the decentralized system is that centralized system, in the centralized system, the center is like a regulator. So if someone wants to move money to another person, they can either approve or disapprove and charge a commission. Whereas here, in the decentralized system, they can decide, and others are like silent participants. They cannot influence anything. They're just like watching it. And in the decentralized, there is no central regulator, and others also can't influence, but they can make sure that everything went okay, and nobody will be able to make any false claims that the money didn't arrive, because all others see that everything went just fine. Let's go to the next slide. Anonymity, another interesting advantage the anonymity of blockchain. There are lots of manipulations with this topic, but let me tell you the following. Blockchain is conditionally anonymous. You can create a anonymous wallet, but it will be anonymous until such time when you reveal that information to a third party. If you move money to an exchange, then the exchange will for sure know that this wallet belongs to us, because we have to go through the verification on the blockchain. And then in the exchange will know about us. The exchange will know where we send money from, or to where we're sending money from, or to where we're withdrawing the money. So anonymity is up to a point. In the case of the blockchain, all transactions are public. We can see all the transactions of all the people, but we cannot know whose transaction it is and who is the owner of a particular wallet until the owner, him or herself, discloses the information about themselves. Therefore, the blockchain itself is anonymous. On the other hand, it is very public, very transparent. There are different blockchains that aim towards the best anonymity and confidentiality, and there are blockchains that are as public as possible, and they use it as its advantage. Let's go to the next slide, please. Okay, so what does make blockchain secure? Let me show you a simple example of a production chain. We will look into the work of the blockchain itself. So blockchain as a chain of interest, it collects more and more information. For example, let's say there are a couple of companies, producers that manufactured some components. In this case, an entry is made, a smart contract collects all those entries, saying what components were produced, the quantity, where they were sent. The next entry is what was made out of those components, to whom those components were given, who delivered them, from what shop, to what warehouse, how those components were further distributed to what market participants, and to what store they got, and who purchased them. In this case, the advantage is that when a client purchases the final goods, the blockchain allows to settle the accounts with everyone in the chain. So I paid $100, and that $100 can be allocated across all the participants of the chain in equal parts. Another advantage is I personally can check the entire chain, how my goods or product was created, how it was delivered, and so on, because the chain is uninterrupted. Also, everyone can see the entire chain. The producer, for example, can see how their components were used, who delivered, who purchased them. So blockchain allows traceability, and allows the manufacturers to improve their services or products. Well, in terms of control, if a transportation company was to make some changes, for example, a transportation company lost a box somewhere on the way. In order to remove that entry from the blockchain, they will have to slide back or to reverse all the entries in the blockchain until square one, block one, which is impossible. Therefore, it allows the best protection security for the business. You cannot make changes and manipulate. And it's very good in terms of the running your economic activity, that none of the entries can be lost or faked, because all of the users of the system have those entries. And if someone forgets to make an entry or something, everyone will still be able to see why, for example, this entry wasn't made, or for example, nothing can get lost, because everyone sees everything and everything is under control. Every link in the chain is the derivative of the previous one. Let's go to the next slide. So what is a smart contract? Another very interesting topic, and you will look into smart contracts in our next lectures. Here I can briefly tell you that a smart contract is like a program code between two or more people or organizations, and the contract terms are stipulated beforehand. We're talking about mathematical formulas here, and they cannot be breached by either party, because the contract and the terms are governed by mathematics. A third party cannot change anything. For example, a person goes to a store and orders a delivery. In this case, the client is not sure whether this piece of goods are in the store, and the seller is not sure whether the buyer has the money to purchase it. And the smart contract solves this dilemma. For example, if both the buyer and the seller have blockchain, the smart contract matches whether the buyer has the money and whether the seller has the goods, and they freeze those two items until the conditions of the contract are met. As soon as I receive the goods as the buyer and pay the money, then the money is unfrozen and go to the seller. So when I go to the store, a smart contract is made. Then the seller knows that they will receive money because they are already blocked in my wallet in the name of the seller until I buy the goods. So who now knows how smart contracts work and think it's a very good tool, give me a 10 in the chat. I hope that I explained the essence and the value of smart contracts quite well. Well, let's move on and let's see what the ways of raising capital to bring the project to the market are. Well, of course, cryptocurrency and blockchain became the good grounds for the development of different companies. And of course, this area started attracting investments for developing and launching different blockchains. And I will tell you in few words what IPO, STO, and ICO is, and their benefits and advantages. Well, IPO is a traditional way of raising money. Let's go to the next slide. There will be more information about it. So IPO is a traditional means of raising money in which a private company that seeks financing offers its shares and goes to the market offering private investors to buy those shares. So they receive some kind of money for that, which they invest in the development of their business and can extend their business and grow. But this procedure is quite complex, and the company cannot simply, after appearing, raise a lot of money and go public. It's called going public. That's why there are private investors, business angels, startups, and so on. So at first, it's more like private investing, and when the company achieves certain sales volumes and some market coverage, they can launch the IPO, which is quite a lengthy and difficult process. Legally, it's very complex, lots of rules and regulations to observe. Let's go to the next slide. And because raising funds through IPO is quite difficult and very, very much regulated, with the appearance of cryptocurrencies, the opportunity to fund different projects in a quicker way has appeared, which is launching a token, which is just one of the forms of crowdfunding using blockchain. For the first time, when blockchain appeared, when people had the taste of it, understood what it is, they realized that they can raise a quick buck with it. And they published some tokens. For example, created a token, posted a website, and gave the description, the idea, like, guys, if you buy the tokens, we will use the money to implement this or that idea. And lots of such tokens were created in 2017, 2018, when we had the main boom of development, when crypto enthusiasts developed this whole area. But unfortunately, because there was absolutely no regulation in this area, lots of ICOs turned out to be simply shell companies and scams. Lots of tokens have been created that were not secured by anything. They haven't been regulated in any way, and in 2017, 2018 was the boom of the ICOs, and then it collapsed. Almost more than 90% of all the ICOs were failures for investors. And that's where the new form of fundraising appeared. IPO is a classical means of fundraising. ICO is fundraising using blockchain technologies. And let's go to the next slide. And of course, a new form of fundraising appears, which is the security token offering. Remember I told you about different tokens. So this one is a security token, which is backed by some real assets, regulated by some regulator, controlling authorities, ministries, departments, agencies, governmental agencies. Well, the most famous authority is the US Securities and Exchange Commission, which is the regulator for the American market and, well, global market too. We have FINMA in Europe. We have in different countries and regions other regulators, agencies, authorities that regulate STOs. And this whole industry right now is gaining momentum. Right now, there are a lot of businesses out there, and even countries started paying attention to blockchain technologies. They realized that they speed up lots of processes. They ensure very good accounting and transparency, thanks to the transparency and the encryption. And starting from 2018, that's where the active tokenization of assets started. Now lots of companies are getting to it. And the blockchain Cryptounit was created as a platform for businesses to come and tokenize their assets. And the users of that blockchain would have a chance to invest into quality projects, investment projects. More information will be given during the third and fourth lecture of our course, how to most effectively make money from giving for investing in the company development through STOs on Cryptounit blockchain. This is what this blockchain is preparing. So here we gave a short description of the different aspects of IPOs, ICOs, and STOs. You can take a screenshot and familiarize with those differences more in detail, as I said, we need to understand that IPO is a classic scheme. It's decentralized. It is very highly regulated. It's very complex, and it's a very lengthy process. And lots of different intermediaries are existent in this market. ICO is fast and simple. It's like developing a website, and that's it. It takes a couple of days, a couple of programmers, and here you go, you can launch your token. Professional programmers, blockchain programmers can launch a token in like 1 or 2 hours and develop a website. It's decentralized technology, blockchain technology, but no regulation whatsoever. Whereas STO, it takes the best from the two worlds, which is regulation, protection of the investor, decentralization, blockchain technologies that allows to quickly and safely tokenize your assets for any business. And also they give you an opportunity, they give investors the opportunity to participate in the investing in different companies. Also, more and more people are now able to invest through STOs because they can buy tokens with very little money, like 50 cents. Whereas in IPO, if the company goes public with $20, $30, then you cannot invest less than $20, $30. Whereas in crypto industry, you can take part of the token and so on. But more details again will be given in our future lections. Let's go to the next slide. The strategy of receiving income or income generating strategies. Well, of course, it's mining. When you buy equipment, you pay for electricity and you get new coins, or it's staking. You buy coins, you freeze them, and you receive additional income. This is one of the types of income generation on the blockchain in crypto economy. Let's go to the next slide. The next strategy of income generation is buying crypto and waiting for it to grow. Well, a simple example, I bought Bitcoin in 2019 at $3,500. Now it costs almost $30,000, $40,000. I can sell it and make some good money out of it. So that's why many people from 2014, there were lots of people who became rich, but not all of them preserved their capitals because there was some decline in the crypto market too. And now the second wave of the development of crypto market made lots of people rich too. The next strategy is earning without or with minimum investments. It's airdrops, bounties, and cranes. Because businesses go to the blockchain, they would like to raise attention, attract attention, and they allow people to make money. People who will meet certain conditions. Let me give you a simple example. When Binance Exchange was set up, in order to attract users to the Binance Exchange, the owners of the exchange gave away 1,000 tokens to every person who registers in the Binance Exchange. And now this token costs $200, $300, or $400. Just imagine how much money people made simply by registering on the exchange on time. Oh, of course, now Binance doesn't need that kind of publicity, and they even can choose whether to register you or not. And I would like also to point out that even after taking our course, you can participate in the draw lottery of tokens and can also get some tokens, crypto, without investing anything. By the way, who would like to take the entire course and receive a gift in the form of cryptocurrency or some tokens? Give me a 5 in the chat, please. Good. Good. I think it's going to be quite useful when you combine the useful with the pleasant. You will learn something and you will get some real assets too. Let's go next. Next slide, please.
And it's natural cryptocurrency exchange, arbitrage and trading. So you may earn on a lot of cryptocurrency exchanges where you may trade, and trading as a sector of activities is getting more and more popular, and the Academy of Private Investor is drafting courses on trading. You may master this profession and you may earn at the exchange as a professional trader. This is highly paid job where you must review a lot of information before you start getting a stable earning. Well, pre-sale. This is the participation in different programs of venture investing. There is a setup of new project and it requires funding, and you may help this project to develop at the issue of this token. So this is a story of Cryptounit exchange. Many people received tokens at pre-sale stage, and today they take a lot of profits and earned a lot. And in case in the chat, we have people who in 2019 at the pre-sale stage of Cryptounit exchange and then sold it with some profit. Give me 100 in the chat. So those people who earned quite a lot because in due time they supported the blockchain, Cryptounit blockchain. And there are a lot of such stories, and you will learn the details within our next sessions. Well, investing in digital shares, and you may invest in digital shares, security tokens, to get passive income dividend. Like Apple pays dividends to its users, you can become co-owners of digital tokens and get dividends from the company that generates profits, and whose tokens you are an owner of. If you want to live your life on dividends only, give me a plus in the chat. Well, and the next slide, please. Modern ways of using blockchain and cryptocurrencies. In 2018, Venezuela became the first country to launch its national cryptocurrency, Petro, and El Salvador also legalized Bitcoin as the settlement means. Different payment systems like PayPal and other Visa, MasterCard begin to recognize cryptocurrencies, and they give their clients the possibility to sell and buy through their services. Many companies today start to accept cryptocurrencies as the payments for their goods and services, and many banks start to work with cryptocurrencies officially, and moreover, they set up their own cryptocurrencies, digital currencies of central banks. And this industry is getting more and more popular and agile. And I'm very happy that you, together with us, study and explore this industry and develop. Next slide, please. Theory is good, but practice is better. Look, today we explored a lot of theoretical things. Hopefully, it was valuable and meaningful. If you learned something new, give me 1 in the chat. And I would like to share with you the following. Quite soon, there will be another 3 sessions devoted to blockchain, and there we will study not the theory but the practical skills. Next slide, please. And you will, by using the Cryptounit blockchain, you will study the differences between different tokens, ways of creation of these of wallets, and all these will be the practical actions to take with different areas where to press, how much you may earn. And the next webinar will take place on the 10th of August, starting at 7 p.m. Moscow time. And with now, hopefully, that this information was meaningful to you. And the next slide is Q&A. If there are some questions, then I will try to answer your questions. I will read out from the tab questions and answers. Did technical works for event staking complete? Are they complete? And this is not on the topic of the webinar. You'd better ask it at our summary webinar or the technical webinar on Cryptounit blockchain. Please explain the difference between BNB Binance Coin, BNB Smart Chain, BNB ERC20, and in which blockchain networks are they used? Well, look, BNB Binance Coin is BNB coin. If it is BNB Smart Chain, then it is the name of the blockchain created by Binance Exchange. There is the exchange Binance that created its own token. Originally, it was based on Ethereum blockchain as a separate token. And BNB ERC20 is a token which is created on Ethereum-based blockchain. And then the company realized that the speed of Ethereum is low and Ethereum blockchain is not good for them. They created their own blockchain. Unfortunately, I may not tell you which blockchain was forked, but they created their own smart chain. This is their blockchain. And on this smart chain blockchain, they created BNB coin. BNB Binance Coin is the name of the token. And it is on different blockchains. And to be able to use this token in some other platforms, they create some duplication of this token on Ethereum blockchain. This smart chain of Binance, this token is available there, and there are some other tokens on Ethereum. And the number of tokens on Ethereum is frozen on blockchain, on the main blockchain. And if a person would like to benefit from some functions of blockchains, they set some bridges. So these are the technical issue, but I believe I managed to answer it. Binance Coin is a token, Smart Chain is Binance, and BNB ERC20 is a token of Binance on Ethereum-based blockchain. I will have a look whether we have some other questions. Is the recording available? Yes, it will be available. So Mikhail says that 7 p.m. Moscow time is 1 a.m. But if you like the content, then you may go to bed later. So there is a question about the taxation related to trading, crypto trading. So under decree number 8, individuals are exempt from taxes on the sale and purchase of crypto assets. Read this decree number 8. It's quite simple. So most importantly, use the services of the organizations registered in high-tech pack. In Belarus, we have at least 3 cryptocurrencies that are quite large. Currency.com is one of the top exchanges at Market Coin Cup, and it's quite fine. So what is the speed of our blockchain? Look, if you refer to the speed of blockchain, then every blockchain has its own speed. In particular, Bitcoin has the speed of only a few transactions a second. Ethereum is much faster, whereas Cryptounit's blockchain is up to 20,000 transactions a second. But it is not a limit. I'm still finding what are the networks that are supported by Unitex exchange when you transfer from Unitex to Binance. So I don't understand the question. Bitcoin, Ethereum, USDT, so you may transfer between different exchanges. So there will be a recording of the session on the 10th of August. So the forecast of CRU, so when it will reach 10 US dollars, when you would like to sell it at 10 US dollars, then it will cost as high. What is the difference between TRC20 and ERC20? TRC20 is Tron blockchain and ERC20 Ethereum blockchain. And these are 2 different blockchains, TRC20 and ERC20. This is the programming code or language, so used to develop one blockchain and the other one. To distinguish them, these are the names, TRC20 and ERC20, Tron and Ethereum accordingly. And accordingly, one token may be created in one blockchain and the other blockchain. But when you send this token somewhere, you must understand from which blockchain you send and to which blockchain you send. And when the recipient you have 2 wallets, TRC20 and ERC20. But the recipient has only one wallet, and you must understand which wallet he has and send this token. At the exchange, you have a token, and there are several wallets of different blockchains. And therefore, when you transfer a token to some destination, the exchange on its own, instead of you, sees which blockchain you send it to and send it there correctly. But this is one of the benefits of storing your cryptocurrencies at the exchange. And you may send to the exchange almost any token, but you are to know which wallet to select so that you may include to indicate which account to send it to. If it is TRC20, then TRC20, then you are to select this wallet of the recipient. Hopefully it's clear. But they say that at our exchange we have TRC20. No, at the exchange ERC20. But you must follow actually, and it is indicated. EOS BNB, is it EOS or something else? EOS BNB is blockchain. EOS is blockchain, BNB is a token. There is Binance blockchain, and on it there is the basic token BNB. And And on EOS blockchain, Ethereum blockchain, BNB token could be created, but it won't be the main one. It will be a derivative. Why? Because in EOS system, for instance, I have EOS wallet and you have EOS wallet, so that we can exchange BNB tokens by using the system of coordinates of EOS. But when I send these tokens to BNB main blockchain, then on this EOS blockchain, they are burnt, whereas on the main blockchain, they are unfrozen and get to my wallet. It's like you pass the road. You are on the one side of the road. On the one side, there is EOS blockchain. On the other side of the road, there is Binance blockchain. And on the one side, people exchange something, but to cross the road, there should be a passage. You must follow some rules so that you can pass from one side of the road to the other road. So you are to be compliant with some rules. And this is called the bridge between blockchains. And thanks to these blockchains, thanks to these bridges, some tokens may exist on other blockchains as the derivative tokens. There is a question from the Vietnamese room. Company, does company plan to place Binance exchange? Quite likely. Will our token be listed at Binance? Why not? The question is when. And what is the marketing benefit? Look, I create a business and sell coffee outdoors. Is there any sense in my posting my shares at Binance if my business, the objective of my business is not to list tokens at Binance? The objective of my business is to sell coffee. And this is the main objective or the main source of income for my company. Whether my shares are at one exchange or not, what is the sense? My key objective of my business is different. You must understand there are a lot of companies willing to list their tokens somewhere. Why? For people to sell and buy? But in 2017, 2018, there were a lot of such companies. But the result is mediocre. And you must understand that it's not the purpose of the company as such to be listed at the exchange. This is an additional method of raising investments. And in case this token is demanded at Binance, we will list it there, but not with the purpose to be listed there, but with the purpose to recruit new people, to attract new investors, and to make many people know about us. But for today, the key objective is to build global investment portfolio. So therefore, I don't see a sense in being listed at Binance. TRC20, will it be added to the Unitex? Look, we have webinars on exchange. It's not on the topic of our webinar. When BTC mining, when will BTC mining end? Does this mean that its value will be stable or the value will decrease? Sooner or later, Bitcoin of mining will be over. And everyone clearly understands this. And in this case, mining as an industry will not disappear. There will be some other tokens that could be mined. And miners today earn from two areas or sources. That is the mining of new blocks, and secondly, a commission per a transaction. If miners have mined all the blocks and this source of income is over, then is complete, quite likely they will increase the commission per a transaction. They will validate a transaction and charge a higher commission. And with an increase in transactions, then the cryptocurrencies may increase as well, the value of cryptocurrencies. But time will show. But it's not something critical. Miners will validate transactions, and accordingly, a lot of people will enter this market until the last Bitcoin is mined. Why EOS is important for our ecosystem? Do you recommend to use EOS? Well, please understand the difference between different blockchains. There is blockchain, Bitcoin, EOS blockchain, Bitcoin blockchain, EOS blockchain, and Ethereum blockchains. And they are quite different, like a button phone, smartphone, and a tablet. So a tablet, telephone, and PC. So these devices, you may use them to give phone calls, but the tablet you may do much more than by using the phone, or on the computer you may do much more operations compared to a tablet. And therefore I told you about EOS. I'm not recommending anything.
On Binance, there is a token called EOS BNB. If I want to buy EOS, should I buy EOS BNB? Very interesting question. Well, look, you need, for me to be able to answer this question more correctly, I have to look into what this specific token means and what other tokens are out there. And then next time I'm going to answer your question correctly, because I don't want to give you false information. A question from the Arab chat. So what is the difference between ETH and UNTB? Well, it's the same difference as between ETH, Ethereum, and I don't know, Waves or many other. Well, the tokens are more or less, I mean, they're both tokens, but the difference is that EOS blockchain is very famous and popular. Many people know it. As for EOS, Waves, Cryptounit, and many others, they are not yet as famous, as popular. So maybe they are not as famous, and that's why they have different value. But in its essence, in its functionality, those tokens are tokens. They are basic tokens of the blockchain tokens. And those tokens do not really depend on the popularity of any given company. Ethereum appeared sooner than many other tokens. That's why it's more popular. So maybe EOS BNB can be a trading pair. That's why I wanted to ask. I'm not quite sure. What did you mention by EOS BNB? So in Binance, there is such a pair for sure. Any other questions? Let's see. So someone is saying, anything can be a token. It can represent the number of money you have. A token can represent the number of liters in the tank. So tokens are entries, whereas cryptocurrency is a means of exchange. You can pay things with them. And whereas cryptocurrency is an entry that can be used as money in the exchange. mutual exchange, interchange. So cryptocurrency is a kind of token that you can use for payment. There are also digital shares tokens. So we have euros, dollars, and we have shares of Apple and Facebook, and we have gold and diamonds. So currency is dollars, euros, rubles, whereas tokens can represent 1 gram of gold, 1 carat of diamonds, and a token can represent 1 Apple share. It can be a token, whereas cryptocurrency is specifically like $1, 1 euro, or 1 ruble. So this is what cryptocurrency is, or currency in general. So Ivan, you said that EOS is blockchain. Do you mean that using is not like cryptocurrency? There is a weird question. Blockchain is technology. EOS, Ethereum, Bitcoin, Waves, Polkadot, those are different blockchains, different technologies. And each of those technologies, like a processor in your mobile phone, you have a computer or a mobile phone, and each of you have different processors. I don't think many of us know what processor we have in our computers. So processor is the technology that ensures the operation of your device. There are different blockchains, different processors, which work according to absolutely different rules. And they have tokens, EOS, Bitcoin, Ethereum, Polkadot, Waves, and many, many others. So those tokens are necessary as a means of payment, like for electricity. It's like megabytes in messages. Every letter in your message has some size. Someone says, I checked EOS on Binance. So you buy EOS and then you can withdraw in 3 BNB networks, BEP2, BSC, which is BEP20, BEP20, and EOS. Yes, you buy EOS on Binance, and then we have the same EOS on different blockchains, which you can use their counterparts. We have original EOS blockchain where it is stored, and for you to be able to use it on other services, a counterpart, a similar token is made and the bridge is built. So this is the technicalities. You don't really need them. You need to understand where you want to withdraw those tokens from Binance. If you want to withdraw EOS from Binance and you want to move it somewhere, you need to understand where you would like to move it, what kind of blockchain they have. It's BNB, BEP2 or BSC, which is BEP20, or it's EOS itself. Those are different platforms where EOS token is used. Okay. So the blockchain EOS is one, whereas the tokens can be used on different exchanges. Okay. Hopefully I did answer your question. Okay. Which blockchain is the fastest? The question is. Okay, there are a lot of different, disputes around it. There are some websites that there are websites that check the internet speed, certain applications that you can launch and check the speed of blockchain too, or internet, sorry. Unfortunately, you don't really have an application that can tell you which blockchain is fastest, but you can test, like by trial and error, see how many transactions a blockchain can handle or generate. If we take Bitcoin or Ethereum, because they are very popular, So the speed is more or less clear. We know that sending Bitcoin depends on the commission from half an hour to several days. It all depends on the commission that you put. So pay more and your Bitcoin will be sent faster. Well, Bitcoin sends the transaction not sooner than 15, 20 seconds. Ethereum, in this case, works according to the same principle, but faster. If you pay good commission, you can receive in a couple of seconds your transaction. Whereas other blockchains, such as EOS or Polkadot, use a different principle. And if we take EOS, it is the fastest because that's its purpose, to be as fast as possible, so that businesses could run a lot of transactions per 1 unit of time. And if we talk about blockchain Cryptounit, it can generate 1 block every half a second. 1 block can contain up to 10,000 transactions, and the number of transactions and the number of blocks can be increased. And the Cryptounit blockchain speed can be scaled up to some really wild numbers. But currently, this demand for such a speed is not there. In laboratory settings, you turn on 2 computers and you load them to the fullest of their capacity and get some high speed. But this will be ideal conditions. But in real conditions, it's different because of many other variables like the internet speed, the cable capacity, the computer memory, and so on. But to see that there is some kind of a application utility that can tell you which blockchain is fastest, I don't think you can get it. Currently, the blockchain, Bitcoin blockchain, is one of the slowest. The transactions can get stuck for quite some time. And that's why Ethereum is a little bit more faster, it's more popular, whereas EOS blockchain is the fastest currently. Well, Cryptounit blockchain can handle 20,000 transactions per second. So this is what the system can do. But I guess only 5–10% of that capacity is used currently. The load of the blockchain is 5–10% of its maximum capacity. Any more questions? I guess none. It's been 2 hours already. Okay, guys, if there are no questions. Someone says, Ivan, how we can stake EOS? Can we stake EOS? Well, this is not as easy as it seems. Guys in my team set themselves this task and wanted to set up a node. For a common user, it is quite difficult. If you are a technical specialist, if you really have set yourself a task to do it, there are a lot of forums and specialized websites that can give you the algorithm for all those actions, how to do that. And just go and Google it. And I am sure there are websites dedicated to EOS, and you can do it. But to stake EOS, I think you need quite a lot of money for that. And EOS nodes are held by very large companies. So if you want to, if it's a big blockchain, you will have to stake quite a lot of money. So it will be easier for you to stake UNTBs. Someone asks about staking Ethereum. Ethereum hasn't yet moved on to the proof of stake. When they do, it will be stage by stage. All of those things can be learned on the specialized websites. So I asked your question about RAM and UNTB and the dependence. Guys, well, this is a little bit off topic because we're talking about blockchain in general and not Cryptounit blockchain. But honestly, I don't think I will be able to answer your question because it depends on many factors: how powerful the computers are, how much memory they have, servers, what kind of the demand for memory will be when the transition occurs. So there are a lot of different variables affecting this. So I can't really tell you and give you the definite answer here. I don't want to misinform you. We need to take in all the variables here to see how it develops over what period of time and so on. I don't think I'm able to give you a definite answer here. So regarding the blockchain, cryptocurrencies, types of tokens, guys, I will be taking those questions. Maybe the questions related to the development of the blockchain technologies in general, not Cryptounit blockchain. So guys, give me in the chat, guys, the answer, your answer. When, in how many years, pensions will be paid in cryptocurrency? What do you think? Someone says 10, 15 countries. In which country? Well, in the country that you live in, guys. When will the pensions be paid in crypto? Someone says 2045. Other options in 2 years, 3 years? Someone says 5 in Salvador, 10 years in Belarus, 30 years. I see 7 to 10 years. Someone says no, pensions won't be paid in crypto because pensions are changing. 10 years, 2023. Well, look, guys, lots of people realize that in 5-10 years, cryptocurrencies will be so integrated into our lives that yes, pensions will be paid in crypto and all the businesses are going to use it. And I'm more than sure that within the next 5 years, more than half of the global population will be using crypto or the blockchain technologies or the services of the blockchain companies to run their business for some needs and purposes. Well, guys, thank you for your participation and attention. I invite you all once again to attend all the remaining lectures, and there will be at least 3 more. The course consists of 4 sessions. I invite you to attend all 4 of them. And at these courses, at the next 3 sessions, you will receive practical skills, and you will also get the chance of receiving bonuses and gifts in the form of Cryptounit blockchain tokens. During the next sessions, you will be shown the earning possibilities on the blockchain, what methods, how the wallets are created, how to use crypto, where you can use it, and so on. You will learn lots of interesting information. I was very glad to be talking to you. Thank you very much for your attention. My special thanks to our interpreters. I hope that all the countries, all the languages that we were broadcasting these webinars into received value of my words through our interpreters, and I hope that everyone understood what I was saying. So I am taking my hat off to you all, and I invite you to our next lecture that will be held on the 10th of August at 7 p.m. Moscow time. Good luck, guys, and may the financial power be with you. Financial force be with you.